those are all the top headlines we're tracking from the world of commodities today. But let's get started. Now, two commodities that we are focusing on today, that's crude and gold. First up, let's talk about crude. Now, crude prices, they are gaining for the second straight day today, with Brent now above that $69 per barrel mark. Optimism is building ahead of the August 1st US tariff deadline that there is. Now, strong diesel demand and fresh curbs on Russian energy exports are tightening global supply. Now, trade expansion talks involving India and Brazil, they're also lifting sentiment for crude. Brent, as we speak, is up about 0.8%, though still down over about 4% for the year. However, now oil price has been rising, but it does face a downside risk as OPEC Plus ramps up supply, raising fears of a glut. Now, weak global demand and expectations of another quota hike on August 3rd, they could add some pressure. All eyes are now on a key committee meeting next week. Other than that, gold on the other hand is holding near the $3,370 an ounce mark after a 0.3% dip that we saw today. Strong US jobless claims data is weakening the case for a near-term Fed rate cut. Higher treasury yields and a firmer dollar, they're also pressuring the bullion, while optimism on US trade deal, that is boosting risk assets demand. Now, gold, that remains up 24% higher on a year-to-date basis. But so those are the commodities that we're tracking. But other than that, Ravinder is also now joining us with another set of commodities that are in focus today. Ravinder, over to you.
Well, yes, cryptocurrencies and industrial matter, both the commodities are focus. First, let's talk about cryptocurrencies, where Bitcoin has dropped to $1,16,000 on Friday, weighing down by the large wallet movement and rising risk ahead of the upcoming US Fed Reserve meeting, which coincide the release of crucial crypto policy report on the July 30. And the decline also came as an investor engaged in profit booking following a strong rally in the July month, choosing to lock in gains as prices had peaked. Apart from this, industrial metal is also in focus, where commodity prices from steel to polysilicon has surged this month. A Chinese investor bet Beijing is finally serious about the addressing overcapacity across the world's second largest economy, and prices for 9 industrial commodities including coal, steel, polysilicon, a building block for solar panels, alumina and lithium carbonate has climbed by 10 to 68% in July month, while sharp prices in steel makers, solar panel manufacturers and clean energy companies has outpaced the benchmark CSI 300 index.
All right, so cryptocurrency, that seems to be declining, whereas industrials, they are in the spotlight and are surging. But on that note, let's just focus to some agri commodities as well. Now, pepper market, that is feeling the heat as heavy rains and rising low-cost imports have dampened demand in key Indian markets. Though prices remain steady in regions like Kochi, nearly 7,000 tons of imports, including from Sri Lanka, are weighing on domestic rates. Now, ahead of a strong Indian harvest, we are now joined by Kishore Shamji Kuruwa, who's the director at India Pepper and Spice Trade Association, for deeper insights into the outlook and key challenges ahead. Hi, sir. Thank you so much for joining us. Now, let's start by talking about the current situation. Now, it points to subdued pepper demand in upcountry markets. That's due to heavy rains, right? And also because of imported pepper. How significant do you think these factors are in influencing the current domestic pepper prices?
Our pepper demand is strong. Usually, we consume good quantity of pepper within India, and that is why, which is not sufficient, what we are producing is much more lower, and therefore 20,000 tons we are importing from Sri Lanka under Indo-Sri Lankan plan, 2,500 tons without duty, and under SAFTA at 8% duty, large quantities, nearly 20,000 tons reported to be imported by us for our domestic use. And now the US scenario has changed. The Vietnam is having only 20% duty, whereas India is having higher percentage. It is yet to be announced officially by the government of India. And that being the case, those who are involved in importing Vietnam, Brazil, and re-exporting may not get that benefit out of the US, and they may have to pay higher duty if the origin pepper is exported. That being the case, on record, the Indian export may come down, but it is imported pepper which is we are exporting, because Indian parity in the world market is 8,400 tons, and Vietnam is giving you at 6,300 US dollar. So obviously, nobody will buy our pepper directly as it is. Over and above, Brazil is available at $6,000. However, it has been seen that under advance authorization scheme, people were importing for crushing or cracking and powdering and re-exporting as well as for extraction. But all these people were buying either Sri Lankan pepper or Vietnam pepper. And Sri Lankan pepper was only hardly 8 to 9,000 tons, balance all Vietnam and Brazilian pepper. That's being the case now, if export into USA, value-added Indian pepper product will attract higher duty because it is not our origin. So those who are involved into this activity of importing the cheap available from the other countries and re-exporting will be having difficulties to re-export. It is high time that our authorities like Spices Board should come out with the statistics as to when the pepper exports are declared, how much is the involvement of that pepper of Indian origin.
Yeah,
And when you show the export figure,
right.
you have to deduct the import value incurred into that.
Yeah,
That is not done according to me, which is a
right,
need to understand what exactly is the pepper export trade altogether.
right. Right. Now, sir, two questions, very
Coming to
short
domestic
questions.
market,
Now,
because
one,
of
how
the
do you
floods,
compare the current prices? Right. Sir, just wanted to ask you two very short questions. How do you compare the current prices to the production cost of Indian farmers when it comes to pepper and all of these challenges that you were earlier pointing out? Any suggestions you have for the authorities, for the government to, improve the situation in any way?
no, you see, the Indian farmer was of the opinion that 500 rupees per kilo should be the minimum import price. That is already fixed by government of India. And pepper imported, any pepper imported for domestic use should be at 500 rupees only. That is in place very well. But the farming community in general is now telling is pepper coming for value addition and re-export with a long rope of 180 days. They are able to manipulate, and that imported pepper is slipping into the domestic market. And they are also, the farming community in general is also telling, when you import pepper for extraction, the 85 the oil percentage is average is 5 to 6% because Sri Lankan pepper you get 12%, Vietnam pepper you get 5 to 6%. So average is yearly 8% or 7%. Balance 93% is the extracted waste, which has been available in the market. So the farming community say from where it is coming. It is not a production by anyone here. Only the people who are extracting pepper, importing maybe the source of this such extracted waste into the market. And that being the case, it is hurting the farmers' interest very badly.
All right. Okay. Right.
Now the presently the domestic demand is very slow because of the floods everywhere, and uh, BR is getting ready for election. So there also the demand is bit slow. But somehow the domestic traders are telling they are able to get bills from Karnataka and Tamil Nadu, the interstate dealers half the value of Kerala, and they are saving on GST nearly
Okay.
3%,
I'm
which is a
sorry, sir.
big
I'll have to
concern.
cut you in between. We are a little short on time, but thank you so much for joining us.